Well, I'm here at Resourcing Tomorrow with Chris Stevens, the CEO of Coda Minerals. Chris, great to be speaking to you. How are you?
Great, thank you. Thank you very much for having me here, and yeah, delighted to be here in the UK and sunny December.
Yeah, right, yeah, okay, yeah. Well, you're listed on the ASX, ticker
Yes.
COD.
Yep.
So I believe this is your second time.
Yeah, second time at Resourcing Tomorrow.
Yeah. What's the vibe? What are you getting from the show these last couple of days?
Look, it's a lot more positive. I think part of it is just, last time I was here was the company was very different. I don't think last time I here the markets were very different. You know, we rebased our project away from what was a copper, cobalt, silver flow sheet to being a copper, silver flow sheet with much higher recoveries and lower processing costs. Mm-hmm. And a number of times in the last 2 days, I've been speaking to investors and they sort of say, tell me about your project. I say, well, copper, silver base. And they're like, stop, you had me at copper and silver. This is what we want to hear. It doesn't hurt that the prices of both commodities are absolutely flying at the moment. I think people are also looking to diversify a little bit away from gold and to get that exposure to future economy minerals and data centers and electrification and, China's real estate calming down a bit and all sorts of things. So copper's looking great. Silver's obviously looking great. And yeah, I think just the positivity breeds positivity around these conferences as well, doesn't it?
Absolutely, absolutely. And I've been here for the last sort of 3 years. I was in Zurich for the Swiss Mining Institute a few weeks ago and then back in March, and definitely the vibe has got better in the last few years, but certainly now, and certainly the vibe I picked up from Zurich was, yes, gold's had its nice, lovely run, everyone's very happy, lots of money's been made, some profit taking, so that kind of first wave, if you like, is perhaps over, a bit of consolidation, but there's quite a lot of cash, both in investors or funds who've liquidated something, but also with the companies, and the gold companies who've now seen their margins really widen, right? So there's a lot of cash there ready to go. And the sense I was getting is we're really in the first or the early innings of the bull cycle. And we can now start to see silver starting to go, copper as well, of course. And people are now starting to look at the development side. So where it was like mid-tiers that are now like the top tier, they're going down a level looking at the developers. So I get a real nice sense of this sector finally, after being in it for sort of over 10 years now, you might actually start to see, some real good returns. But just what's your take on it?
I think, if you're a fan of the old Lion Selection Resources clock, we're kind of at that point, we're at like 6 a.m., 7 a.m., where everything's starting to wake up and really improve. A lot of that is cash acquisitions happening. And it also starts with, we're unashamedly a sort of a tier 2 size project, right? We're looking at about 32,000 tons of copper production per annum for a total of 450,000 tons over life of mine. So we're not small by any long stretch of the imagination. But we're also not enormous, Carapatina or Oak Dam West or, Escondida kind of size copper projects, right? And copper's an interesting market. 80% of copper is produced by 20 companies. Look at Escondida, produces over 1 million tons per annum a year into a 23 million ton market. So when you look at Coda at 35,000, you need a lot of Codas to start filling up some of the gaps as these projects start to deplete. And that's a really interesting thing. I think there are two themes that have always come through me talking with groups looking to fund projects and also acquire them. The first is that over the last year, I've seen a lot more realism creep in. Larger companies saying, we've realized we're probably not going to find a 500,000 ton per annum production deposit. Like, they're just not being found in copper. Lithium, sure, there's tons of it. But copper, no. And that realism that we're going to need to start looking at the mid-tier projects is creeping in. And I think the second one, which is more of a intrinsic thing for Coda, we struggled to fund forward our PFS for a couple of years. I think part of that is a tough market, and I think part of that is also that, people were nervous about our cobalt.
Right.
So what we did was, we've been trying to do this for a while, which is effectively rebase the project to work economically purely on the copper and the silver, and to see the cobalt as a bit of a kicker. There's only two ways you can do that. The first is improve flotation recoveries, and the second is to use a different process. Now, what we've done is move to a chloride leach. That's reduced capex, it's reduced opex, it's increased recoveries. We no longer need the cobalt. We're working on bringing it back in, but we're less worried. What does that mean for us? Suddenly we're able to fund forwards our PFS. And again, I want to thank our shareholders for being just phenomenal. We went out to raise 6 to start with, ended up raising $12.3 million.
Right, okay.
So, there's $13 million in the bank today. We're drilling, we've got 3 rigs on site. And suddenly everyone's going, oh, okay, you're fully funded for PFS.
Right.
That's interesting.
So you're fully funded for PFS. How's that going, and when's it anticipated to be completed?
We got drilling about a month ago. It has been the toughest drill program I think I've ever been involved in terms of weather.
Okay.
Fortunately, South Australian weather seems to be behaving again, and we're moving really well. But
very wet or something? Or?
Oh, it was very wet.
Right.
And, obviously you have huge amount of responsibility to stakeholders. You've got to protect the roads.
Yes.
You've obviously got to protect your people as well. So there's been a few down days, and we'll be drilling into January now. But, wow, it's moving again, which is phenomenal. 19-hole program.
Okay.
Most of those holes going down, 12 of the holes going down to 400 meters, Fleming Bluff. They're triple use core. So every single one of them is being used for geotech, it's being used for met sample, and it's being used for resource update.
Okay.
That's going to lead to a lot of news flow coming.
Yeah, absolutely. So you have a current resource then?
Yes.
Statement, and that's what, the 35, is it?
We're 65 million tons at about 1.3% copper, roughly, plus the silver and cobalt credits.
Yeah.
So it's a decent deposit. We say 1.1 million tons contained equivalent. That's basically 800,000 tons of copper, about 30 million ounces of silver, and 35,000 tons of cobalt. Again, none of the cobalt's in the economics at the moment. We're just looking at this being a copper-silver project at the moment.
Okay.
We're 93% JORC indicated. The mine plan is pretty much 100% indicated, so we're in that higher confidence category.
Okay.
So we're not in a difficult position where we've got to drill to be able to declare a reserve.
Yeah.
We've got to do the rest of the PFS. But the drilling's really for met sample, geotech, and obviously use every hole to update your resource as well.
Yeah. Okay.
One other thing to mention is all of that's going to go into an updated mine plan. So we've got a major mine planning exercise going, because the mine plan currently is based on our old flow sheet.
Yeah, okay.
And it's based on very outdated commodity pricing.
Yeah.
I think some of the MG14 and Winnabout ones are based on $8,000 a ton copper, and we're 11,600. Mm-hmm. So again, you should be able to see some huge economic increase there. Because I guarantee we're leaving tons in the mine plan that should be mined, and there's probably a few that shouldn't be mined based on the old cobalt. So huge upside there. Can't get worse, obviously, because you just leave it as it is.
Yeah.
So that's probably the most exciting thing happening in Coda world to me.
Absolutely. So do you have a resource target that you're aiming for, or you're just going to see what comes in?
I'll see what comes in, but it'll be plus or minus not much. We do need to close off some of the eastern flank of Emmy Bluff, but there's not a lot of... because we really focus on met sample and geotech, we're not doing any outspace, sort of outstep drilling on this one. We do have a bit of exploration down south that we're going to look at for open pits. Obviously, when you've got open pits and underground, open pits are great early revenue. And so there's a couple of really good targets there as well.
And how much will the other qualities factor into the PFS? Is it going to be more, you're going to focus more on the copper, or does the silver credit sort of fit in there as well, and the cobalt, or
fits in as well? So
so all adds to the number.
Interesting, copper and silver are the same sort of leach technology. They just come together.
Right, okay.
Cobalt needs a different type of leach. So it needs a reducing leach. It's fundamentally different. We've been working on that. We've had some success, but we're not the kind of company that plays around with sort of what ifs and maybes. So the copper and the silver, we've done a huge amount of work, great replicability, really good predictability. You're getting every time you're getting what you expect to see in that. We've done some optimization, there's more to go, but it's 95 for the copper, 98 of the silver. Cobalt's bouncing around like nobody's business. We don't really have a handle on it. We're just not putting that out. When we have a handle on it, we'll tell the market what it is. But the great thing is we don't need it.
Well, there's worse qualities to be in than copper and gold and silver, I would say, at this point in time. Yeah. I mean, both doing very well. Silver really just starting its sort of move, isn't it?
Absolutely.
And a long way to go. The sense I got from Zurich was, 100 is very easy.
Should be.
Yeah, about 12 to 18 months' time.
Wow.
And, 250 to 500, sort of, at the sort of towards the tail end of the cycle when it all goes a bit crazy.
I mean, it's great stuff, because you've obviously got that gold to silver ratio.
Yeah.
And silver is sort of lower in the ratio than it normally would be at this point of the cycle. Then you've got a huge amount of use in solar panels.
Absolutely.
And obviously a lot of other uses. And then you've got just the fact that from an exploration point of view, single commodity silver mines tend to be amazing, or they tend to be pretty small, and there's not a lot of those mid-sized ones around. There's not a lot of them. And you've also got that co-product, byproduct thing in mineral economics where, the copper price affects it as well. So to me, I love having a silver byproduct.
It's great, and most silver comes as a byproduct, isn't it? There are obviously pure silver plays, which are great, but more often than not, it's a byproduct.
Yeah.
just on the solar thing, I think, is it India that's building a solar farm that's the size of Paris, I think.
And solar makes so much sense for India.
Yeah,
You get grid issues, a microgrid, solar, local storage. It's just a no-brainer. You know, people always ask me about this, and I'm like, well, if the universe wanted us to have free energy, it would have put a massive nuclear reactor in the sky for us to use. And I'm quite firmly of the view that solar is good stuff. And battery technology is also coming leaps and bounds.
Yeah, absolutely. Yeah. So, and I mean, another thing I got from Zurich was. So if gold continues its sort of move, you can expect silver to do perhaps 6x on that, and the miners to probably do 15, or the explorers to do 15x on that. So I mean,
at that rate, will be a silver copper project.
Well, could be all right.
It's a relatively small resource in truth in terms of silver.
Okay, yeah, sure.
The copper's the main game, and again, 800,000 tons contain copper. That's a lot of copper.
Yeah.
By any standard, that's a decent-sized copper project. There's 20. The mine plan's 20 moles of silver, about 30 in the resource. 20 miles. 20 moles, million ounces of silver.
Oh, sorry, million ounces, right? Yeah. Okay.
So again, this is never going to be a single plate silver mine, but it's lovely to have that kicker in the economics.
Absolutely.
Banks love that stuff. They don't love things like cobalt and some of the more esoteric commodities, but God, do they love, it's all about your kind of funding and your debt service coverage ratios, right? It's how you get a project into production.
Absolutely. And do you have well, not sense, but do you have any inclination at the moment on the economics? Have you done a scoping study, or is the PFS going to... Right, okay.
Oh, yeah. I mean, I'm a financial modeler by trade. It's my first love, valuing, and our commercial manager, Katrina's far better than I ever was, and probably ever could be. So we're a very model-driven company. Everything we do is driven by the model. It's always up to date. So the most recent economics, which we put out at $9,260 a ton copper and $30 an ounce silver, was... I'm going to talk post-tax because we're grown-ups, right? Yep. Juniors like to talk pre-tax because the number sounds bigger, but the tax... wants them cut.
To be paid.
So we're talking 850 post-tax, 850 million post-tax Aussie.
Okay.
It's about 1.2 billion pre-tax. IRR's roughly 30% post-tax based on those outdated pricing. Today's spot price, and we put sensitivities out there, but you're looking at about 1.9 billion post-tax NPV for the project.
Okay.
That's insane. 60% IRR.
Right. Okay.
Yeah. You don't see that very often in copper, and that's based on obviously the most recent spot price is about 11.6 copper and about 58, 59 silver.
So obviously that's not. Do you have any idea on OPEX, CAPEX at the minute, or not? Is that
absolutely? Yeah.
Yeah. Go on.
It's all in our data. The CAPEX all in, and again, this is an area that juniors play a lot of games, and I hate it. Just quote your CAPEX number, please. So it's about $600 million Aussie that we need for the full funding. It's getting up to about 690 with sustaining CAPEX and every last dollop in there. The financing requirement will be about 500 mil Aussie.
Right, okay.
Because obviously you've got early revenue before you finalise your decline from the open pits.
Okay.
So we're talking about $500 million Aussie financing requirement.
Yeah.
That's phenomenal. It's very low. And again, I encourage shareholders to really scratch beneath the surface because some of our peers just fudge numbers like you wouldn't believe, and it drives me up the wall.
So have you got a mine here? Are you confident to say you've got a mine here?
Oh, this will be a mine.
You're working through the stage gates. You've got a mine.
This will absolutely be a mine one day, in my opinion. There's just, the economics support it. Based on all the information we have right now, obviously we're at PEA, post-PEA, post-scoping stage.
Yeah.
There are questions we need to answer, but the great position I'm in right now is as a CEO is none of the answers scare me. It's just a process.
Right.
We need to go through it. Yes, we need to de-risk the whole aspects of it, and we're doing that right through the next 6 to 12 months. And there's a reason why companies that acquire projects, would often rather pay 10x for a project post-PFS than an earlier stage one because they want to see that work done. It's hard, it's thankless, it's not cheap. We're going to spend about $12 million this year.
Right.
But it needs to be done.
Yeah.
And a lot of my background is in feasibility work. We've got a phenomenal team.
Okay.
And the pre-feasibility is the most important study a company will ever do. Without question.
Yeah.
And so we're going to do it really well.
So your focus for the next 12 months is PFS?
PFS, yeah, absolutely.
And that involves obviously drilling and met testing and flow sheeting.
Drilling feeds into a resource update.
Yep.
Resource update feeds into a full trade-off study and mine optimization for underground mining methods and a re-optimization of the whole project holistically through the 2 open pits. It's actually 3 open pits. And then the 1 underground. The 3rd open pit's very small, but the 2 of the main ones really provide good early revenue. So that optimization is really important. There's big upside there. Geotechnical, we've used very conservative assumptions to date. We need to look at what we can do with that, get more data, and then maybe sort of be able to get a little bit higher extraction ratios in the mine. Met variability, so we need to, it's a big laterally extensive ore body, the main one, so we need to make sure we're testing all parts of that ore body to make sure the flow sheet holds all the way through. Yep. And then that feeds into engineering, so your process infrastructure and NPI non-process, tailings, waste, all of those things. So goes through about $12 million, about 12 months of work. We're about a month in, and an awful lot of very late nights in the office.
And is that funded and costed for?
Sorry?
Is that funded and costed for?
Absolutely.
Absolutely,
yeah.
Okay.
So we just raised $12.3 million.
So you've got exactly the right amount.
That is pretty much the exact right amount. The money we had should be taken care of for corporate costs, so that should deliver us that PFS.
Okay. Good. And then what? Well, I mean, it sounds like you're well on the way here. You've got your project here. You're confident it'll be a mine. You're going through the stage gates. I mean, in a year's time, obviously, in a year's time, you want to be, if we come back here, for example, or just talk in a year's time, you want to have that PFS.
Yeah.
Real good grasp there of the economics. Would you also want to, I don't know, have interest from off-takers, from financiers, when you're looking at how you're going to finance this thing, or would you be wanting approaches from other companies, perhaps looking to get a stake or taking them out? So just thinking beyond the PFS, because I'm not saying it's a dead cert, but it sounds like it's going the right way.
There would have to be a complete unforeseen event that I as CEO cannot possibly see right now for this not to continue going very well. We've done so much work to date. We've got a handle on the met, we've got a handle on the mining, we've got a good handle on the geotech. We need to continue de-risking that, but I have so much confidence that this is moving in the right direction. Off the back of that, so the answer to your question is yes to all of the above. We are commercial. We are open. I have a lot of background in M&A. Our chair is the former chair of Deloitte. The guy really knows what he's doing, what he's talking about. We've got great advisors, and we are looking at all things. I have some views, happy to share them, but, I think a lot of CEOs in my position are heavily incentivized by boards to do deals very early. And I think that can be problematic because you get the wrong deal in often these sort of JV type structures, project sell down. That can be very challenging for your shareholders. I get why the CEO wants to do it. They get a bonus. But the reality is, if you get the structures wrong, if the money's not followed, you can either end up stuck in a position no one else wants to come in, or you can end up just getting bled dry and eventually selling out. And so there are some structures I don't like personally, and I'm not going to be pursuing, but there are ways to structure things correctly too. So there are great JVs and there are bad ones, and the quality of those depends enormously on the experience of the CEO and the board and the advisors. Would we be willing to get taken out? I'd be pretty heartbroken if it happens soon. I've got an ambitious work program. I've got the funding, and we've just taken the dilution to get the funding. In 6, 9, 12 months' time, when the PFS is done and the values come up, if our shareholders get presented with a great deal, I think that would not be the worst outcome. But I personally have an ambition to stand down that decline one day and say I was part of the team that did this. But I absolutely don't need to do that as CEO either. So again, no ego, no set thoughts. We want value for our shareholders. I would like to see this become a mine one day, and I am open to every possible way to do that in the most value accretive way possible.
Good stuff.
Thanks.
Well, Chris Stevens, CEO of Coda Minerals, thank you very much for your time.
Thank you very much for having me. Cheers.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.